Today we're going over chart reading and how to read candlesticks. So, why are candlesticks so important and why are candlestick patterns so important? Well, you can use them for one to predict trends, and you could use them for trends that you're already in. So for example, if you do calls or puts, or if you're in on a stock, you can use candlesticks to determine when to take profit, when to get out, when a reversal pattern is coming, or when you might actually want to do puts if you're in on calls, or vice versa. So let's jump right in. We have a lot to get through, and I'll basically explain to you what candlesticks are. So candlesticks, as you can see, they're composed of four parts here. These are bearish candles, the red ones, and the green ones are bullish. They are composed of a low, a high, a open, and a close. The only difference between bearish and bullish candles are that the open and close are flipped around, which makes sense because a bearish candle goes down and a bullish candle goes up. So if we take a look here, this would be a bullish candle, this green candle right here. So the open for this candle, we could pretty much click on this right here and we could see that the open was 64.18, the low was 64.05, the high was 69.94, and the close was 69.4. And we can see that all at the top here. If you take a look at this bar right underneath here, and I can also show you how to do it manually. So the low for this was 64.04. Sorry about that. The open was about 64.2. The close was 69.39. And the highest point was 69.92. And this is on the daily. This was on Friday the 24th. So you can see we kind of matched this up with this green candle right here. It doesn't matter what it looks like. They all follow the same pattern. So even this one down here opens at about 53.49. Or the low is 53.49, it opens at 54.94, the close is 55.3, and you can see that the close and the high is extremely close to each other, 55.38. So you can see this is a bullish reversal pattern. This is a hammer right here, but you can see we went down, so this would have been an indicator you could do puts, but you would have wanted to take in profit right here because we went back into an uptrend, which you could see was pretty clear with this being a green candlestick right here. So how am I drawing these conclusions? How am I coming to that? I will get to that in a second. Let's just review one more candlestick, and this one is going to be a bearish one. So obviously with bearish ones, we are flipped around. The open is up here, close is down here, because that means we closed lower than we opened on the day. That's why it's a red candlestick. So if we look at the open here, the open is at about 69.31. The close is at 68.95. So we had about a 36 cents decrease from open to close without regards to, high, low. We're just talking about opening and closing on the daily. So the highest point on the day would be 71.65 and the lowest point would be 67.74. So when do you solely want to look at the lowest points and the highest points, or the open and the close? You really want to look at the open and the close if you're just trading, like if you're just swinging. Because obviously, if you're just holding this stock for long term, none of these really matter whether it hits the low or high unless you're planning on selling out that day. You're looking for the long-term trend. Like all these candles here, if you were riding it up from this point all the way up, not all these candles in between would be ignored. You just ride it straight up. Now, keep in mind that these patterns do reverse and that we could probably see now a downtrend coming. So what would have been your indicator? Well, your indicator here, your first indicator really is this gap in between here. You can see we have a gap from about 62.23 to about 64. And what was this? This was due to Intel dropping on earnings and AMD picking up the slack really. So with that said, you pretty much want to keep in mind that candlesticks love to fill gaps. As you can see, whenever there's a long green candlestick, we always have a slight pullback. So you can see a long green candlestick, we actually pulled back all the way down before we went up. Same thing here, we had a green candlestick pulled down before we went up. So here, this could very well be a pull down before we go up. However, since there's a gap right here, and combining this with other indicators, we could pretty much see that the pattern is starting to wear out, that we were in a strong bullish trend, and now that the pattern could probably be coming to a close. So how can we use candlestick patterns to determine this? Now we're going to take a look at AMD's 5-minute chart just for a closer look on a breakdown of patterns. So we're looking at the 5-minute chart right here. This is tradingview.com, by the way, a completely free software that you can use. So we're looking at the chart here. Let's see if we can identify some candlesticks and some reversal patterns. So we're looking here. I'm actually going to pull up a different cheat sheet that I have. I'll attach these both in the email. Now you can see we're in a strong uptrend here. So how can you know if it's too late to get into a trend? So say, you're watching this here. It formed a nice bull flag. This was an amazing bull flag that you could have gotten in on right here once you saw the breakout. But say you didn't get in on that bull flag. Say, you're watching it and you're watching it go up and you want to know, okay, well, it bypassed about here. It could pull back now, or is it going to continue going up? So your key to basically seeing whether this is going to go up, let's match up some patterns here. So we see there's this pattern called 3 white soldiers. This is 3 green candles in a row where each has a higher close and their close is near their high. So if we take a look here, where do we have 3 green candles? We have 3 green candles right here. This was a good one. But you could see that if it pulled back a little bit, you might have gotten scared and taken profit here, or stopped out, even if you got in at the top once you saw the 3 continuation of that pattern. Obviously, once you go up, you're gonna have a slight pullback. Now, once the pullback isn't about half of this height here, once it's not more than half the height, then you can assume that you're going into an uptrend, or once you don't see a reversal candle. So as you can see here, we don't really see a reversal candle. We go up after this, but say we didn't get in on this trend down here. Say we're looking at this bigger trend up here. Now, this would have been 3 green candles in a row, or 3 white soldiers. So how could you have traded this? Well, we could have went in at the top here, and we could have rode this up a little bit more and taken profit here. Now, what happened? It pretty much formed another bull flag at the top. Although this is a pretty much more clear bull flag, I'll actually draw it out for you guys so you can see. You're pretty much just drawing lines so you can notice the pattern better. So we're just going to draw this out here, and I'll show you how this played out. So draw it like that. Doesn't have to be perfect, but you can see pretty much what you want to look for. When you combine these with chart patterns, these can be very powerful. So you can see we have a bull flag here, which you can see is also called like a bullish pendant. Same thing if we're looking at the cheat sheet over here. So with that said, now what are some things you want to look for? You want to look for a breakthrough with strength. So you can see we broke through here. This is your key right here. Once it pierces the top, that we're going up. So once you figure out that you're going up, you want to figure out the strength that it broke through with. So it broke through here. We have 3 green candlesticks. So this would have been your indication to go in right here. In fact, this is your indication that we are going into an uptrend. Now, what are some things you could have done? If we didn't get in there and we're writing this 3 candlestick pattern up here, what could we have looked at? So we're going to draw lines here. And you can see that pretty much this formed another bull flag up here. So this would have given us a perfect opportunity for us to ride this up just a little bit more, and we could have gotten in all the way up here. So we could have scalped this pretty much from the 3rd candlestick, let's say 68.45 to about 69.5. That's a whole $1 on AMD. So what would that do for you? Now, we can calculate our percent gain by taking the last price, the 69.5 that you would have closed out at, minus the 68.5, let's say roughly give or take, and you divide it by the original 68.5, and then you times it by 100. So that would have been a 1.46% gain. That might not seem like a lot, but on stocks like these, that is a lot, because these stocks don't move very quickly, or basically they don't move that much percentage in that short of a time. This was basically from 11:20 to about 12 o'clock. So within 40 minutes, it moved that much. That is a significant amount for a call option to move up, let's say even 10, 15, 20%. So that is a really good trade right there. And these trades do build up over time if you can identify these patterns. So say you got in here, you're writing this pattern up. Where would your indication basically have been to basically stop out or take profit? So basically, we're on this 5-minute candle here, and you could see that we're looking here at this candle. This is a very suspicious candle before we went into downtrend. But say you can't see that candle. So say we're just looking here, you can see that this candle is very weak. If we're looking at the strength of candlesticks, obviously a pure green bar or a solid bar right here with the open and close being the same as the low and high, that's a very, very strong bullish candle. We will most likely go up from there. And you can see once you have very, very strong bullish candles, you mostly went up. Now, the next one is let's say the low, or lower than the most bullish. So we're looking here, and basically what happened is that we had a high and it dropped down just a little bit. So you can see that's pretty much this candle, basically the exact replica of this candle, and we went into a downtrend from there. Not saying that it's not a strong candle, because we do have examples of that where we went up, but it's typically a little bit weaker than a solid green bar. Then we have this one. This one almost looks like an inverse hammer. This one we're getting a little bit weaker here because we have a little bit more to the downside. Then here is kind of like an uncertain pattern, and you can see these two are pretty much similar, except this one has basically a bigger open and close than this one. This one, the open and close is almost exact, so it's neutral because you can't figure out where the trend is going. You can see we went down. So from here, once you saw this neutral pattern, that could have meant either A, we're going up, or B, we're going down. So where would you have wanted to get out? You would have wanted to get out at this candle right here, pretty much, once you saw this shooting star. So the shooting star can sometimes mean a bearish reversal pattern, but once you have a red candlestick following another red candlestick and dropping like that, and especially this neutral one, that means you want to take profit because they're not anything strong. You pretty much want to look for, if we have a pullback here, you want to look for another run up. Just like here, we had two candlesticks, two red candlesticks. They weren't three black crows, so that means that the pattern was still safe and we rode it up. The main thing with candlesticks is that you want to check out these patterns. You want to look at these patterns and you want to say, okay, are we going into an uptrend here? Are we reversing? What are the key aspects that we're looking at? And when you combine them with chart patterns, as you can see here, they're very strong. Candlestick patterns aren't meant to solely be used alone. However, one of the most popular candlestick patterns are hammers. As you can see, once you have a hammer, even if it's an inverse hammer, it could typically represent a trend changing. But if you could have picked up on this forming like a pretty much a small like bull flag right here, you could have rode this trend up. And that's what this is all about. You want to combine those chart patterns and those candlestick patterns together. Once you can do that, you can pretty much make small scalping profits, or you can even look at it on the daily. So say we're looking at it on the daily, how could you have gotten on AMD? So let's say we zoom out here. Obviously we had AMD consolidating in this region for a very long time. So let's open this up and let's see what we could do here. So if we zoom out a little bit more, you can see, let's actually crush this down a little bit. So we're looking at this pattern right here. This is since about February. Remember, the longer it consolidates and takes to break out from a pattern, that means the bigger the breakout is going to be. So we're going to draw a line up here. We're just drawing a line of resistance. If you guys want to learn about support and resistance, I have a technical analysis seminar where I explain all of this, but I'll also explain it a little bit briefly on here. So basically, resistance is the line that it's bouncing from up here. That's the line it's not breaking through, it's resisting that. Then we have support, which is the line that's bouncing off. So pretty much you can see we kind of formed a triangle here. So it doesn't have to be perfect at first. You could just draw it and then you can move the line around to how you want it. So you can see pretty much that's our line right there. And our key point right here is where we broke through. Now, what are some things you want to analyze? You want to analyze, did we break through with strength? So you could see, put it off the screen there. You could see, yes, we did break through with strength. We didn't just pierce the top here and then go into a downtrend, which happened a couple times throughout here. We pierced it just a little bit and then we went to a downtrend and bounced off the line. We were actually squeezing in, coming to a close at the end here, but we had the right catalyst and we just shot up. And this is the candlestick you're looking for. You basically can assume that once a stock breaks from a pattern, especially a long pattern like this, it will go up and then it'll most likely pull back to the line of support, the closest line of support. Remember, support and resistance lines can be used interchangeably. All these topics are used together when you're trading. So you could see we drew basically a big bull triangle right here. Then we had this breakout, it pulled back a little bit. You would have wanted to go in on calls about right here. So obviously this would have been the open of the candle, this is the close, and this is the low. So actually the close on this candle would have been a good sign to go in on calls. Now a lot of people didn't go in on calls because the market is and it was in a downtrend. Now do remember that when the market is in a downtrend, nothing can really stop the market from pulling down, especially like when we had coronavirus and all that. It's very hard to stop the market from a major event that's happening. For example, if tomorrow, let's say there was news that the stimulus checks were canceled and that coronavirus cases were on the rise, and there were some tensions between another country, that would cause the market to tank, and that can't stop the stocks from tanking. So sometimes these patterns do fail, but when these patterns do hold up, they are wonderful. You could have assumed that it would have bounced beautifully from here and went up, which was exactly what it did. Now you can see we had a nice solid green candle here, but it was deceiving because on this day, today, we went up and we closed red. We had a bearish candle. So what can you expect from that? From this, you can see we had a gap to fill. We can expect this to pull down a little bit more, if anything, and then shoot up. Now, do remember we have earnings coming up, so that is also another factor to take into consideration. So candlesticks aren't the only thing you want to use. You want to use candlesticks, you want to use chart patterns, and you want to look at the news and what's happening on it, because catalysts are the most powerful above all. So with that said, if you're writing this chart up on the daily, how can you use this to your advantage? Well, we're looking here, you know, say we're trading on this days. Remember, this is a daily calendar. So we're in a downtrend here. You know, we just bounced off the resistance. Even though these haven't really bounced off the resistance except for here, we can still kind of see that it went up and then it went down. So here, this would have been a good time for puts, and then we went down to the bottom line. Now you might be saying that doesn't look like a lot of space there. That doesn't look like anything, anything significant, but that is actually a lot. So if we're looking at this candle right here, that went from about 59, and down here, this candle is about, let's say, about 49. So from 59 to 49, if you could have wrote down that 10-point difference, you could have gained a couple 100% on puts. Now, with that said, you can see this candle right here. This is the candle you're looking out for. This is the moment of truth. When it bounces from this line, you want to look at this pattern. Are we going into a bullish pattern? Are we going to pierce through and go into a downtrend from here? What's going to happen? So remember, we have support right here. What are we looking for? You can see we have this candle, and this is a reversal candle. If we zoom in on that, it almost looks like a hammer, but it's a thinner hammer. So once again, it is weak, but that is a very good sign that we are going into an uptrend. You would have waited on this pattern to confirm, and you could have went in on calls here. Now, this would have been risky because you would have seen this play out here. You might have seen it going up slowly. Your calls might have been getting burned, but once you had this big green candle right here, you could have been rest assured that you would have taken profit here. So these are all things you want to look for, especially when we bounced from up here, went down, then we had a hammer. You can see how this hammer looks and compare it to this hammer right here. This is a bullish reversal pattern. Sometimes bullish reversal patterns can be ignored. A bullish reversal means that you could be going into a downtrend, but you could see that with bullish reversal patterns, we are going into an uptrend here. That is the main thing. Bullish reversal means that we are going up from that. So if we want to take a look on a proper example on a website, you can see here, this is a bullish reversal pattern. This is a hammer candlestick, and we basically went up. So you're going down, and then basically it goes and it pulls back up. So that's what you're looking for here, and that's exactly what happened. We went down, and then we pulled up from this point and went up. And once we got to about here, we actually broke through the line of resistance. So that's a very good point to note, guys, and we will continue on. So let's see if we can identify some more patterns on this chart. So if we look at this one right here, this is called an evening star. This is a bearish reversal pattern, meaning we are going into a downtrend. So we can see right here, we have an evening star. We basically went up. This is kind of like an undecisive candle, and then we went down. And the down, it has to be almost the same size as the bullish candle. So what could you have expected from here? Pretty much you could have expected to broken into a downtrend. What I personally would have done, I would have waited until the next candle. You see it pull up, but you see that we're closing red. I would have went in on puts right here. Now, that might not have seemed like a good idea. You could have lost a little bit, but do remember that the low was right here. So you could have taken profit there. On another note, we did open up here. So you could have went in on puts from here and rode this candlestick down. Now, that candlestick had a high of 55.6 and a low of 52.1. So you could have rode down about a 3.5 gain. I mean, obviously that's from high to low, but even so, let's say give or take 2.5 points on $2.5 on AMD. That's still enough to give you a nice decent return on puts. You could have also held this for the downtrend. Remember, we are on the daily chart. Now, if we are looking at something a little more on the shorter term, let's look at the 5-minute chart and let's see if we can identify some of these patterns. So say, we're going about our day, and let's take a look at the patterns we can find. So we're looking at AMD's 5-minute chart right here, and you could see right here we basically had a bearish reversal. Now this candle was green, but do remember it is an inverted hammer. Sometimes these candles can look green or they can look red depending on how they form. But once they take this form, this certain form, that means it's bearish. So you can see from here, we pretty much went down. And even if you didn't get in on this trend here, we had 3 strong red candles, which definitely indicated that we were going into a strong downtrend, and which was exactly true. We went from about 62.06 to all the way at the bottom, if you had wrote it down, to about 58.99. Now, if you didn't get out there, you could have even got out here once you saw it reversing. So let's say about 59.69. That would have been a nice scalp. Let's say even $2-3 on AMD. Now, you can see here we had a nice double bottom form. If we're looking at the patterns cheat sheet, this is what a double bottom looks like. You can see it's a bullish pattern. Now, what do you want to look at this pattern? I see a lot of people get mixed up with these. They see a double bottom, and they go in on calls right here. What you want to do is you want to look for confirmation of the pattern. So what does confirmation of the pattern mean? Obviously, if we're looking at this chart right here, you can see that there's an entry and an exit. You want to look for a break above the middle point. So you can see right here, we broke above the middle point. This would have been your indicator, but there wasn't much of a break. That's what you always want to watch out for. You want to use these candlesticks to your advantage. So you can see, although we broke through, we kind of had this unsure candle right here. That is an inverted hammer, or basically a hammer, and we're basically going into a bullish reversal trend at this point. Now, this can be a little bit confusing because you could say, well, that's a bullish reversal pattern. We're going in, you would expect for us to go into an uptrend, but because we're already in an uptrend and we're seeing this reversal pattern, that's most likely an indicator you want to wait until the next candlestick to get in. So this is where these come into play. Now, if we were to look at this on, let's say we were to look at a different pattern and we were to compare it to a line graph. So let's take a look at what happened today. Obviously, we're a little bit more up above. So I'll compare the candlestick graph to the line graph. So say we're looking at let's say we're looking at here, basically how things played out. And let's pull up AMD on another graph here. Let's pull it up on this side of the screen and we can compare, because oftentimes you're trading on Robinhood or a broker that may not have these capabilities. So you can see we are looking at the 24th here. Actually, this was Friday. So we're looking at Friday, and where would you have seen this bull flag? So this is the bull flag right here. This is the staff, or the pole actually, for the candlestick, and this is the bull flag. And then we shot up from here. There are a lot of bull flags here. You can see right here, this was another one. So let's say 11:45. We're looking at around 11:45. This is right here. Obviously, this is the weekly chart, so it's a little bit harder to see, but on the daily chart, they're a little bit more noticeable. Now, let's say we're looking at what happened today. So we are looking at the 27th. You can see we shot up, then went down. You can see how it kind of plays out the same. Look at the chart over here. Let's see if we could open this up a little bit bigger. So look at this chart and look at that chart over here. So what could you have gained from this chart? Now you see we shot up here, but remember this isn't a solid green candle. We just went up and pulled back a little bit, so you want to wait until the next candle. So we're looking at the next candle now. It's unsure. You can see we had this little, it was red, it was bearish, but we're pretty much a very weak candle here. Then we went up a little bit more, and then we fell back. So this candle right here kind of would have indicated to you that this might have been a weaker candle. And if you had gotten it on calls down here and you didn't get out as yet, I would have gotten out once it went up there, because you have already had the indicator beforehand that is already very weak at the top. So basically we went up and then we fell down. This would have been a pure example right here that you want to get out, that you do not want to stay in this trend. Even if you have even if you went in a little bit more up, you want to set your stop loss. You want to get out right here. So where would my stop loss have been on this candle? So let's say I was trading this candle right here. You know, I went in, let's say we opened this candle right here, and this is the open. Where do I want to set my stop loss? I don't know anything about where this is going. Could have went up, it could have went down. So what you want to do is you want to take a look at the other candles, and you want to see where the support and resistance is. So you can see we kind of bounced from here, so this is resistance right here, and we bounced from here, so this is support. So we pretty much have a line of support and resistance about right here. Let me draw that a little bit better. So where do you want to set your stop loss? You want to set your stop loss basically right under here. So let's say 68.86, 68.8 even. So even if it were to pierce through a little bit, you're not hitting that, because sometimes we do pierce through, but then we go back up. So 68.8, 68.7 would have been a good stop loss. But then you see we rode up, and this would have been a good point to take profit once you saw this unsure candle. Even if you did not hold till this candle, this would have been your clue to take profits here. So that's how you use those. Now, once you started going into a downtrend here, these two red candles basically covering this green candle. So let's talk about covering candles. You can see here, once you have a green and a red, this is a bearish reversal pattern. This basically means that you are going into a downtrend. Now, of course, these are not right next to each other. We don't have a solid green candle and then a red candle right next to it. These are a little bit apart, but you can see that these two red candles pretty much took up the whole space of this red bar. So you could have assumed, I mean, obviously we had support down here, that we would bounce a little bit, but eventually we're going into a downtrend, which is exactly what happened. We bounced and we got weaker and weaker. So it was a bounce, a bounce, a bounce, and we got weaker, which was seen with the amplitude of each bounce, and then we eventually broke through to the downside. Now, once you got to the downside here, you can see we have these red candles, the green, red, red. What you really wanted to watch out for is these. You see how these are very unsure. They're basically two inverted hammers right next to each other. That means that you are going into, you might be changing the trend, but it's very unsure right here. That means that, you know, it's the pattern hasn't been set. It could go down from there, it can go up, but this is definitely what you will want to watch. As soon as you saw this uncertainty ranging around here, these patterns were very thin, open and closes. This is your clue to get out. So once again, combining patterns and candlestick patterns, chart patterns and candlestick patterns, among other things such as support and resistance, is very strong. You can use these to predict patterns and to go in on trades. Now, this is a very powerful thing, and let's look at it in another sense. So you can see pretty much this is what we had for the rest of the day. We just had these small candlesticks. So judging on the small candlesticks, this is when you don't really want to go in on calls or puts, because this is when you get burned, especially if we're looking at the, let's say we look at the Robinhood version of this. You can see that we basically went sideways. And what happens when you go sideways? Well, when you go sideways on options, specifically what we mostly trade in R2K trading, you can see that you would get burned, because once a stock goes sideways, you're not going up or down. It doesn't matter if you have calls or puts. From this point out, you would have gotten burned regardless. So how can you prevent that? So you basically see we're slowing down a movement here, nothing really big. There's nothing really with definite volume. So we have very small candles, 68.65, 68.9. That's actually kind of a fairly big one. You can see these range from 69.24, 69.43. We're slowing down a movement. Until you see a large candlestick like that, like a green candlestick, then you kind of want to play out a trend. But you can see we're pretty much moving very, very slow here, basically ranging around the same ranges right here. We're moving from about 69.49 to about 68.5, so just a dollar range here. You could pretty much draw like lines right here if you wanted to, and until you break out from that channel that is kind of just moving between that thin channel, then you would really want to go in on a calls or puts. But you can see that these candlesticks help you a lot in letting you know basically how much the stock is moving. Because if you were to look at this graph here, this could have been misleading. You could have seen this here and you could have taken this, oh, this is going to be a double bottom here maybe, and we're just going to shoot up, or we're going to continue going up. But your key here would have been when it broke out of this pattern, and it basically broke out. We didn't go upwards from here, we just broke out and went down. And that would have been your key. You know, you might have been going into a downtrend. But if you were looking at the candlesticks over here, you could see that the opening and closings are very close to each other, and we weren't getting much action. So this would have been your key not to go in on calls or puts at this point. Now, taking a look at another stock that kind of went up today was Western Digital. So this one has a very interesting graph that I'd like to go over. You could see that we opened in the morning at 9.93% up, about 1%. We shot down immediately, and then we basically went up and rode out the rest of the day. So if we're looking at it on TradingView right here, we're looking at the 27th. You can see we have this long green red candlestick. But one thing you really want to be careful about is gaps. You see that whenever you have a gap here, it's very common that stocks like to fill gaps, like I was saying before. So even though we had this, like, kind of like a bull flag, bullish pennant right here, we still dropped down just because there's a gap right there. We filled that gap, and then we pretty much bounced from here. You can see this is a line of support and resistance pretty much here. How is that seen? You could see that it's very tough to see here, but you can see we bounced from here and went down. So we could have seen this unless it really broke through. You could see that we kind of went up from here, and we had some step ups, basically a little gap up here. And what happened at the end of the day? We pretty much formed a bull flag at the end of the day. And how do you see this? Let's draw a line here, bull flag, and we have a bull flag right here. So how could you have used this to predict movement? You could have used this to predict movement in many ways, actually. You could have seen that we had a bull flag, and you could have went in at the end of the day for a swing. So what would that have done to you? This would have basically, you went in on a swing. The market was looking good. How does this help? We're looking at a bull flag right here, or a bullish pennant, whatever you want to call it. How does this help you? If you have went in on calls at the end of the day, you would have been up already. The stock is at 43.99, and we closed at about 43.72 today. So this was a major sign you could have used, and this is a perfect example of a bull flag on a 5-minute chart, especially on Western Digital. Now you can see if we're looking at over here, we kind of cupped around. So what's one thing you want to look at here? Obviously, some patterns are not for sure. Like, some patterns aren't just, printed in a book or anything like that. They're kind of made as you go along. So you could see we cupped around. What would you ever want to look for? You would have wanted to look for rejection at the same region. So 43.31, we're going to go to about the same range. And you can see we broke above with volume. We just kept going up, 43.46. So what time was this at? This was about 12:30. So let's look at what happened at 12:30. So we're looking at 12:30 right here. This is this candlestick representing this big cup around. So you can see we basically cupped around straight up, and we went up. And you can see once we broke above these candles right here, that's your sign that we are going into a bullish trend. And we had 3 white soldiers, many of them, especially right here. These are 3 white soldiers. But then we had a slight pullback, and then we broke out above. So remember, these patterns, sometimes you have to wait a little bit longer for them to play out. But say you went at the top of this candlestick at 43.72, and you're very nervous. You don't know if it's going to go up or go down. Remember, you had 3 candlesticks right here. It didn't drop. Your key was that it dropped more than halfway, so I would have gotten out at this green candle right here as a stop loss. But once it hits a little bit more than halfway, and even if it pulls up back a little bit, you kind of want to get out on that next candle. Then you're going to drop down, and you see it forms this pattern. But you can see the pattern is kind of shaky, obviously, because we're on the 5-minute chart. And you can see closer at the end, we were very undecisive. We were just going up and down and bouncing around. So that is a very good sign that it's using these lines as support and resistance, and it's about to break out. So once again, chart patterns are very important. Once you combine all of these chart patterns, support, resistance, candlesticks, volume, indicators, all that, this will make you a successful trader in the sense of scalping and a lot of other ways. So you can see here, just like I was saying, this is an ascending triangle or a bullish pennant. You can see this kind of matches up with that bullish pennant right there. And obviously you would have wanted to wait on entry and exit, but with the market looking good and you're playing this after hours, especially with semiconductors moving this week, especially, and this being a tech week, that's enough of a catalyst to push it out and enough to basically lead you to that next step of taking this further into a swing. So that is pretty much how you use candlesticks in trading. You really want to use them to know when a pattern is reversing, when to get out of it. Obviously, the best way to practice with these is pretty much just look at these patterns. I'm going to attach all these sheets to the email with the link to this video. You guys really just want to look at this and you want to take notice of these patterns. And the most amazing thing, or the most beneficial thing that you can use, is analyzing the strength of candles. Whenever you hear a trader talking about, I want to see if it's going to break out of this pattern with strength, or if you want to see that, if it's moving upwards with strength, you can use the size of the candles to understand how strong the movement upward is. You can see we had a very bright green bar right here, open and close exactly the same as the high and low, and that is a very strong candle, so we could have assumed we are going up from there, and that's exactly how you want to use these. Now you also have these other ones when they're combined. You have a couple candlestick patterns like falling three, evening star, and you can identify some of these on here, like right here. We have a evening star, green candle, red, and then we went down. This might have been a little bit confusing just because they're not right next to each other, but you still could have used that pattern. Sometimes these patterns don't play out exactly as you want them, but once you can identify them, that's the main thing. So what are the key things you want to take away from this seminar? The key things you want to take care of these seminar is that, is that you want to take away, how can I read the strength of these candlesticks? How can I understand how strong a candlestick is? And that's using this part right here. You basically want to look for hammers, shooting stars. You want to look for bullish and reversal patterns. Obviously, hammers, shooting stars, inverted hammers are very good ways of looking at them. You can see you have it inverted right here and basically shot up. There was a big gap up right here. Now, if you had went in on calls right here, you would have wanted to get out right around here. Then you could have rode that trend down for that gap. Always remember, stocks love to fill gaps. And these concepts, if you're doing crypto or anything like that, these concepts do apply to crypto as well. These are actually crypto related concepts. They all trade basically on the same things. Crypto is it's a very good way to read crypto with bullish reversal patterns. And just to show you a quick example for some of you guys that are interested, let's say we pull up Bitcoin. Let's take a look at BTC USD, and we're looking at, let's pull up the 15. I mean, we had a lot of gap ups today, so it's very weird. See if we could pull it here. I don't think this is the right graph. Let's take a look at Bitfinex. Okay, so let's see. Yep, this is the chart that I was looking for. You can see that you can use the same patterns here. Bull flag went up. Some of the patterns might be a little bit more clear here, but you can see like when you had three green candles, you went up. What you could have even used like support here. So if you drew a line about somewhere here, I'm gonna have to pull this down a little bit. So you can see if I drew like a line of support right about here, it's kind of hard to draw on these, but you could pretty much see the concept that we shot up a lot from this line, because we went up to about 11. We broke 11K today. So what would you have really wanted to look for? You really want to look for a pull back to this line is very possible, and then a bounce up. Crypto kind of trades just like stocks, especially with candlestick patterns. So this is just to show you guys that these patterns do not just exist in stocks, they exist other ways too. And even we do have like double bottoms and all that form. Let's see if I could find something here. Let's look at the daily. Sometimes the patterns on crypto are a little bit more apparent on the daily. So let's see. You can see we kind of formed a double bottom right here, or like an inverse cup and handle. But we didn't have that confirmation as yet. You can see we formed like a bull flag. So that's why you always want to check out that confirmation. You want to wait for that confirmation at the end, and you want to pay close attention to whether it's breaking out or not. So you can see we kind of had a bull flag right here if I draw this out for you guys. So let's say this is the staff. Let's draw this. Then this is the bottom about right here, and this would be another line for it. Let's see. And as you can see here, so let's say that's your bull flag. As you can see, once you broke out, especially like with volume, this would have been your basically point that you would have entered at, and you could have rode this all the way up to 11K. So that's a 9.7 to 11K. That's an easy $1,300 profit right there. So you definitely want to pay attention to these patterns, whether it's Bitcoin, whether it's stocks, anything, they all apply to the same. Now I'm going to roll over and start answering some questions. So one question I have here is, how do you swing trade if you can't do day trading? How can you swing trade at market close? So one thing you want to look for is you want to see how the market's trending at close. You know, especially if you're getting in at the last 10 minutes or so, this actually isn't a bad idea at all. You're pretty much kind of like trading on the future of that stock, unless, like, you know, if you're trading to open. So it's not a totally bad idea. If you're swing trading a stock and you're just going in at close, you definitely want to see how it's trending. You want to look for those patterns, like especially those bull flags and all that, because a lot of times the influence from the market, or say the, you know, buyers, the rush of buying and selling is kind of out of the way once you go into after hours. It's the stock moving on its own. So those patterns do hold true a lot. Now, can you explain how volume can show when you go in for bullish on a candlestick pattern? So this means that, you know, you're getting a lot of volume in on this candle. Something's pushing this price up. Something's pushing the stock up, really. So that's why 3 green soldiers are very good, are very important, because that means that there's volume rushing in and basically pushing it up a lot. So basically, you know, what we talked about over there. So a lot of these I kind of answered. I got a question on, I have a lot of great picks. How do I find a good option trade? So I use a program, it's called Benzinga Pro. I find this very helpful when I explain this to people. So let me do that. So we are looking at Benzinga Pro over here, and as you can see, this basically shows you all the unusual option activity, or all the option activity that is rolling in. So you can see right at close, we have option puts on SPY, IWM. When you see puts like these, you can assume that the market might go down tomorrow, or, you know, obviously you have a mix between calls and puts. But once you have like a lot of influx of puts, you can kind of tell the direction of the market. You could tell if people are looking to sell, especially by like expiration dates and all that. Like you can see we have calls until October 16th. So that person's not really worried even if the market went down tomorrow. They're holding for the long term. Obviously, you have things like earnings monitors. So you can see basically what stocks have earnings coming up. One of the greatest things about Benzinga News or Benzinga Pro is its news. You can see the news that are coming in just like that as soon as it comes in. So you can see Fujifilm gets 265 million federal contract to support coronavirus vaccine manufacturing. This is amazing right here. So what you want to do pretty much from there is you kind of go and you do your analysis. Obviously, market is closed right now, and this news came in at 10:22 p.m. So what I would pretty much do from there is I would look at the stock pretty much, and I would see when did the news come out. So the news came out at 10:22 p.m. So pretty much that means that nobody really got in on it unless it's like after hours. So 4 a.m. would have been the max that they can get on it, or the minimum time that they could get in on that. But you really want to look forward to what, like tomorrow, the unusual option activity flowing into it. So I'd pretty much go over here and I would type in FUJIF for Fujifilm, and you can see obviously today we didn't really have any unusual activity, which is kind of expected because it's not a stock that you would just randomly go in on and trade. So you can see if we pull up Fujifilm right here, This can really cause it to spike tomorrow. I mean, obviously this one doesn't have options. I find that kind of funny. That's still pulling up on the option list over here, but you can obviously see a run up there. So this is how you find stocks. You basically look at the news feed, because news is the biggest catalyst here. You can see that the mRNA CEO sells 11,000 of her shares at an average price of 71. So one thing you want to look at here is that if the CEO especially is selling her stocks or selling their stocks in a company, then that is very risky. That can mean that they don't have faith in the stock going up. It can take a lot of turns, but one thing is that you really want to look at what is going on. What's the news? What's the catalyst powering these? So this is one way that I really look for stocks to trade, like any type of news that can really push anything up. So like VSE corporate announces 59 million in new contract commitments. You want to look really for news like these. Like what was a big winner today? I know this one was a big winner. It was Medic Nova. So if we're looking at here, they had news that came out basically 8 hours, or they had news that came out a long time ago, pretty much at before market open. So this would have pulled up on Benzinga Pro. So we type in MNOV Medic Nova. You can see at 6:53 a.m. we had the news of the COVID vaccine. And this is how you could have gotten in on this stock. Obviously, I did not see this news. That's why I didn't go in on it. But this is pretty much how you get stocks to trade on. And this is how it's a very great software. You have 14 days free trial. I definitely recommend checking it out because you can really, really get in on stocks before they pop on this. So with that said, I also have another one. Let's see. How can you tell how much you would be gaining or losing even if you're not in on the option? So pretty much what you would want to do, let's say you go in on MNOV options, and let's say it was at 4.45. so let's say you got out at 3.5 and now it's at 4.45, and you want to measure how much more you could have gained. So from 4.45, all you do is you take the last price. So the last price would be the 4.45 minus the 3.5, and you divide it by the original price and you multiply it by 100. That's a 27% more gain that you would have gotten. Now, however, if you had gotten in at like 1.27, let's say you gotten in at 1.27 when you originally bought it, so 3.5 minus that 1.27 divided that by that 1.27, that's a 176% gain, keep in mind. But now, say we're looking at that 4.45 minus that 1.27 divided by that 1.27. That is a 250% gain. So you could see it's a little bit different, obviously, because that's 27% if you had went in at 3.5 to that 4.5. But obviously that's a way bigger gain. We're looking at from 175 to 225. We're looking at 75% more since you have went in at a lower price. Just like this. If you had gotten in at 0.01, obviously you can't really buy these options at 0.01. That's a 34,000% gain. So if this moved from 3.4, so 3.4 would have been 33.9 thousand to 3.5 where it's at 34.9. Obviously if you scalp that, that's only like if you had gotten in at 3.4 and left at 3.5, that's a mere 2% gain you're looking at, 2.94% gain. But obviously that's 1,000% from the original price. So you always want to be careful with these percent changes. That can throw you off. You really want to calculate it like this, and that's how you calculate these. So I really hope that I helped today. If you guys have any questions, feel free to DM me on Discord. The link to my Discord is in my Instagram bio, my TikTok bio. It's even attached to this email. You guys can join, ask me any questions. You guys, there's a free chat room, free alerts, and free education in there. Any questions are welcome. If you have any questions regarding this, candlestick patterns, whatever it is, just DM me. And I hope you guys have a great trading week ahead of you. And it was my pleasure teaching you guys once again.